Hi, I'm Brett Hickey, founder and CEO of Starmount Capital. Excited to be with you today as part of Star Mountain's Market Insights to talk about what's going on in the market, what are we all seeing, what are we all thinking, and how can we try to make the best decisions into the future. I'm really excited to be with you today to discuss a lot of the geopolitical and market uncertainty and ever-going changes with Dan Alamariu, who is the Chief Geopolitical Strategist for Alpine Macro. Prior to joining Alpine Macro, Dan spent 8 years with UBS as an executive director responsible for country sovereign risk analysis for the Americas. Prior to UBS, Dan was a director at Eurasia Group in various roles, including global comparative analysis, and he ran product development. He also has worked at the Bank of Tokyo, Mitsubishi, UFJ, and Deloitte Consulting. Dan pursued postgraduate studies in international relations at the London School of Economics, and he holds a master's degree in international affairs from Columbia University and a BSFS from Georgetown University. So Dan, we're excited to be with you here today and talk about what's happening in the world and what you're seeing, what you're thinking, and we'll try to extract as much insights as possible from you. We know all the topics we're going to talk about today. You could really dive deep into hours. And for people that want to go deeper into any of the content we discussed today, you can reach out to the Alpine team at info@alpinemacro.com. With that, Dan, thank you for joining. Let's open up. Talk to us a little bit about what are you seeing in the world today, what's going on, and then we'll walk through a great dialogue.
Thank you, Brett. Thank you for having me. Pleasure to be here. So again, it's obviously the title of our presentation is Geopolitics Drives Volatility. We live in a very volatile or increasingly volatile world. Not only geopolitics, but trade. Everything is changing, is driven by Washington. So I think that we need to look at how the world is evolving, and from there, looking at some implications for markets and economics, anything from inflation to sort of the future, I would say, investment geography, what's stronger, what's riskier, what will benefit or what could thrive in a more volatile and again geopolitically fraught environment. Things I would call broadly as related to national security or strategic sectors, and we'll talk about that. So in terms of both risks and opportunities, again, geopolitics don't cause one, they cause both. They basically scrambles winners and losers to the extent that the political variable can be isolated, which is not, of course, always the case. And then we can touch upon different tactical opportunities and stability and end up with kind of 2 or 3 big things to keep an eye on. But to start with, let's go sort of what drives the world and kind of where are we now. Of course, a lot of the current geopolitical churn, especially over the last month and a half, has been driven by Washington, has been driven by this sort of radical shift in policy that comes out of the White House, that comes out of an attempt by the Trump administration to completely, or to some extent at least, remake the global trading and geopolitical order. And just to frame the conversation, on this slide, on slide 3, slide on the right is kind of obvious, and it shows that as the Trump administration is trying to remake basically the global trading order in fits and starts, and of course it's a choppy, chaotic process that I think will be reined in eventually to some extent, because otherwise it basically would interfere with the Trump administration's own political and economic self-interest, again, if this uncertainty continues for too long. But as it continues, you can see that trade uncertainty has, at least since the end of February, increasingly correlated and is driving market outcomes. And that includes things like the S&P Volatility Index, high yield, and it's, of course, inversely correlated to global stock performance. So that's the chart on the right. On top of that, of course, we have a more geopolitically fraught world. So we have an administration, of course, that wants to remake alliances, wants to sort of change, and I'll talk about that in some detail, wants to change the way the U.S. relates to the world. It's still a question of how that will play out and how much of that is headline risk and how much of that is real risk, right? And again, Trump also has a very sort of aggressive style of diplomacy, which is high on rhetoric, but again, more moderate when it comes in practice. And we are, I think, entering a more geopolitically tense world. The chart on the right shows two things. So it shows it's a standard geopolitical risk index. And it shows geopolitical acts, which are real things that happen, and geopolitical threats, which is more like noise. So one thing that's interesting here is that geopolitical risks and threats are rising, especially since the end of Trump's first term in office. But on the other hand, if you look at how Trump governed his first term, and in politics often the past is a good indicator of the future, unlike in markets, a different pattern emerges. So you see actually during Trump's first term in office, and has partly to do with how the United States conducted foreign policy, which is this sort of escalate to de-escalate approach. But you see that geopolitical risks actually decline while headline risks increase. And this is what I mean. Trump has a jarring way of conducting diplomacy. And the bottom panel shows that clearly. The proportion of headline risks to geopolitical acts materially increased in Trump's first term. Of course, after Trump left office, you had Russia, Ukraine, and you had a number of other things, including Israel, Hamas, that hadn't made for a more geopolitically tense environment. But the question now is, with Trump president again, this kind of escalation in terms of trade, in terms of geopolitics, is this going to lead to a more tense world, let's say, not within the next 6 months, which it will, but within a year? Or will it, again, tame down geopolitical risk? Will these kind of threats and desire to cut deals actually lead to deafening noise, but a lower geopolitical risk profile? I tend to be of the first opinion, but again, it's quite possible that we end up in a more peaceful world in a year or so, although for now, it clearly doesn't appear to be so. Now, the other thing I would say is what drives this? What drives the Trump administration to do this? And I would say that there are three things that come out of the last 20, 30 years post-Cold War. One of it is a drive for economic resilience. And that explains the trade policy. And it really has to do with this fact that, especially post-COVID, the United States and many other countries want to be able to have secure supply chains. They want to be able to produce things that are critical for national security, for healthcare, for whatever. The second one is the remaking of the social contract. You can say that the end of the Cold War broke the social contract in most countries. The idea of pensions, of lifetime employment are gone. And the rise of what's called populism, but it's really a critique of governments that don't really deliver for their people in many ways, it comes with this attempt to remake the social contract. So Trump's, for instance, attempt to bring back manufacturing jobs, whether successful or not, whether productive or counterproductive, is part of that, is trying to create a new social contract. Biden tried the same thing again. He's not the first to try. The same thing happens in Europe. All the populism that you see and the churn around that and the noise is in fact about this idea: how do you remake the contract between the ruling and the ruled? And the third global trend, and this impacts everything, I think these are the top three trends that will be with us for a decade or more, is this US-China geopolitical rivalry, which is normal. Of course, it is worrisome, but it's the idea that great powers, especially that a dominant hegemonic superpower and a rising one, tend to compete, and that tends to be choppy, tends to create dislocations, and of course tensions. So what does this do? Well, it sets the stage for a more fragmented world, and we're already entering it to some extent. And it has to do, and then if you take the US and you take what the Trump administration is doing in this world, and how are they trying to approach it? I would say that the US, what it's trying to do is trying to do what I call invoicing the world. And you see that in terms of Trump's approach to ask allies to pay more for the US, I would say, security umbrella, trying to raise tariffs on countries with whom the Trump administration feels the U.S. hasn't had fair trade, whether rightly or wrongly. So is this idea that the U.S. is less willing to bear the cost of a global system as the benefits are either unclear or unevenly distributed. Now, this has happened in the past. So what this shows is that if you go back to the 1800s and the first wave of globalization, to have globalization, have an increase, for instance, in trade openness, which is a key gauge of that, you need a dominant superpower. You need a country that underpins the system, defends naval sea routes, trade, investments, act as the lender of last resort. Well, before World War I, that was the UK. After the World War I, the UK retreated from that into protectionism, actually. And of course, after World War II, you have the rise of the United States. Now, that seems to be turning, and the United States has the same qualms that Britain had after 1918, which is, okay, why are we paying for this? What benefits are we getting on it? So that is being renegotiated. It doesn't mean it goes away, but it means that it does create this kind of friction in the system, and it leads to this kind of very rough renegotiations, which, obviously have been driving markets for the better part of this year. I've already talked about the key drivers of this. The other thing I would mention is in terms of implications, those are very serious, no matter what happens. One is redistribution. You're going to have new winners and losers. Finding that is very important for investment decisions. Second of all, there is a drive towards reindustrialization. It has to do with this resilience question. And it's not only in the United States, but it's in Europe. It's in other geographies as well, that sort of deindustrialized after the Cold War to some extent or another. Now, that will partially succeed. It's unlikely the labor-intensive industries return to developed countries. And the third one, of course, is higher geopolitical stresses.